Okay, so let's talk about Bitcoin. What is it really? Is it the future of money? Or is it just another risky tech stock? For years, we've heard this story that Bitcoin is digital gold, a safe place to park your money when things get chaotic. But what's been happening in the market lately has thrown a massive wrench in that whole idea. So we're going to dig in and try to figure out what's really going on here.
And this is really the core puzzle, isn't it? I mean, think about it. When the market started getting shaky, investors did what they've always done for, centuries. They flocked to the safety of gold. And what happened? Gold's price shot up to record highs. But Bitcoin, the asset that's supposed to be the heir to gold's throne, it did the exact opposite. It tanked. So what gives? Why the completely different reactions?
Yeah, this really lays it out perfectly. You've got this total split personality. On one side, Bitcoin's price just fell off a cliff. It behaved like what we call a risk-on asset. But then you have gold, the classic safe haven asset, the financial equivalent of a bunker during a storm, and its price just soared. It's like they were supposed to be teammates, but when the game got tough, they ended up on opposite sides.
All right, so this all leads to what you could call Bitcoin's identity crisis. So for our first section, let's unpack these recent market movements and see what's going on.
Now, on to our second point, trading like a tech stock. Let's look at the evidence for why Bitcoin is acting this way right now. According to a pretty compelling report from Grayscale, the answer is kind of surprising. Right now, Bitcoin isn't acting like gold. It's actually trading a lot more like a high-growth tech stock.
When the whole high-growth tech sector took a nosedive, Bitcoin's price chart looked almost identical. It fell in near lockstep. And that tells you a lot, right? It shows that, at least for now, investors aren't seeing it as this stable, safe thing. They're treating it like a big, speculative bet on some cool new technology. Kind of like a hot but still unproven software company. But what's super interesting is why the price dropped. It was just classic market mechanics. You had US-led selling pressure, a bunch of money started flowing out of those new spot Bitcoin ETFs, think of them like stock market funds but for Bitcoin, and traders everywhere just started closing out their riskier bets. All of these things are exactly what you'd expect to see when a growth stock takes a hit, not when a supposed safe haven is supposed to be doing its job.
Investing in Bitcoin today is fundamentally a bet on adoption, and that really gets to the heart of it. It's a massive bet that one day everyone will be using it.
Because even though it's acting like a tech stock now, let's not forget about the digital gold promise. This is the long-term vision for Bitcoin, and it's a big one. And the argument for it becoming digital gold is actually pretty strong. I mean, it's got all the right ingredients. First, there's a capped, finite supply. Only 21 million Bitcoin will ever exist. Period. That can't be changed. Second, it's independent from governments. No central bank can just decide to print more of it. And finally, you've got this incredibly resilient, decentralized network that's been running 24/7 for over a decade. So why isn't it acting like gold yet? Well, this table really tells the story. It all comes down to one word: maturity. Gold has been around for thousands of years. It's like the wise old grandpa of the financial world. Bitcoin? It's barely 17. It's basically a teenager. And just like a teenager, it's brilliant. It's got tons of potential to change the world, but man, it is still super volatile and prone to some serious mood swings. And that brings us to the big idea that kind of connects all these dots. To bridge the gap between how it's acting today and what it could be tomorrow, we need to see it as a bet on adoption. So let's just define what that means. Bitcoin's current value isn't a report card on how well it's doing as a safe haven right now. Not at all. It's really just a measure of how much people believe in its future. It's the market basically placing a bet on whether it will one day become that digital gold everyone's talking about. And the takeaway here is pretty straightforward. For as long as Bitcoin is still in this growth phase, its price is going to be tied to the mood of the market. When investors are feeling good and looking for growth, Bitcoin will probably do really well. But when they get scared and start selling risky assets, well, Bitcoin is likely going to go down with them, just like any other tech stock. Which leads us to our final section, the path to maturity.
Well, there are definitely some big hurdles on that road. For one, it needs to scale effectively, which just means it has to get way faster and cheaper to use for a ton of people. Number two, we need regulatory clarity. Governments need to figure out the rules of the road. And then there's the big one on the horizon. It needs to be quantum resistant, which is a fancy way of saying it has to be secure against the crazy powerful computers of the future.
But here's the thing. If, and it's a big if, but if the Bitcoin community can clear these hurdles, the whole game changes. The theory is that the insane price swings would start to calm down. That connection to tech stocks would finally break, and it could, at long last, become that stable, reliable asset that it was always meant to be.
And that really leaves us with one last huge question. Let's say Bitcoin does it. It clears all those hurdles, it matures. Could its digital nature, the fact that you can send it anywhere in the world instantly, or split it into tiny pieces, actually make it better than gold? Not just an alternative, but a truly superior safe haven for our digital age. Now that is the multi-trillion-dollar question that we're all waiting to see answered.